Okay, welcome everyone. I wanted to do a follow-up video on what is the ladder in DOM, how to read it, and so you can see everything, because I think a lot of people get things confused with the DOM, and what everything means is this is truly how the market moves. Okay, so we're doing this in pre-market right now, and what you're looking at is the ES mini futures contract. Okay, so we'll run through what each column is so you guys can see what we're talking about, and then we'll run through specifically how to read the DOM. Okay, so first things first, this column here is the price column. Okay, this column is the pulling and stacking column, and simply you can see when the market is refreshing, that 16 has been pulled from this price, 20 has been pulled, is constantly moving all the time. Okay, this is the resting bid orders, so each price, how much is resting and waiting to buy at each price. Okay, the middle columns are really important in the DOM. These are custom columns that if you look at some depth of market, they're not normally there. And in my opinion, if you don't have these columns, you're missing out a massive part of information and understanding order flow, right? So the left column is trades that have been carried out uh, by hitting into the bid, right, which is known as selling. Okay, and then the right column here is trades that are carried out in the ask, are known as buying. So any buying that's carried out. Okay, there's another column that's not shown here, which is MBO data at each side, which essentially shows you how much is in size in each clip. So we'll scroll down and try and find this. So I have this set to a minimum of 50 here. Okay, so it only shows orders that are larger than 50. So this means at these prices here, not one of these orders, so we've got 154 here, 138, 117, 110, not one of these orders here are larger than 50 contracts in one clip, right? It's essentially what that means. So as a quick analysis on that, these can likely be pulled when they're there, when price comes to them, and see how the tape reacts when price gets here. Because typically if size wants to get filled, it will sit there for a while on the depth of market. Okay, now before we cover how the price interacts with each level of what's going on, we need to cover what's in the left hand side. The left hand side is the volume profile. This shows the total amount of contracts that have been executed at that price for the current day's session. So this is from close, works from close to next close basis, and it gives you the volume that's been carried out for that day. This is not split um, by pre-market session or regular trading hours. You can split that if you so like, but I think it's nice to see the volume that's carried out in pre-market also. And in the left hand side is delta. Okay, so as an example, we can see here that 1,553 contracts were executed at this price, okay, at 205 and a quarter. Now the negative 565 essentially means that there's been 565 contracts sold more at this price than there was buying. So it means that sellers have taken control of this price and sold more. Okay. Uh, so the difference between that is this is delta is the difference between market buy orders and market sell orders. So if it's a negative number, that means that sellers have taken more control of that price. If it's a positive number, buyers have taken more control of this price, which you can see here. 240 contracts positive delta, 534 contracts executed at that price, the buyers won at that specific price. Okay, so hopefully that makes sense of what you're actually seeing here. Now, how price actually interacts. Okay, Now the price is currently here. This works diagonally, okay? So the market's just about to sweep. So you can see that 4 lifted off for buying into this price at market orders. 42 are currently selling. You can see that 20 then hits. Market sweeping a level. The market is now selling into this price, but buyers are refreshing and absorbing. 102 there hit the bid and sold into that price, have then ticked up. Okay. Anytime the market buys, this is market orders aggregating at the next price. You know, it's like blue team and red team. These constantly refresh. So you've got 13 refreshed, pulled, and then 15 executed. So this is the main way to read the DOM. You know, when it comes to your key levels, you can see absorption at prices, and you can see if buyers and sellers are starting to step in. As an example, right now 55 is just flashed in the DOM at this price. This updates every 50 milliseconds, so you're getting a real-time indicator of what is happening at the market at each price every second. Okay, this gives you context as to why some resistance levels and support levels hold and why some do not. Okay, so we're going to be doing a series where we run through specific trade examples. What is absorption on the DOM? What does it look like when orders are being pulled? What does an iceberg look like, for example? You know, all of these key things. I know that they're buzzwords that are thrown around in the market, but how do you actually execute them, and what do they all look like? Okay, so I just wanted to clarify the main parts of reading this, you know, because I see a lot of people that have the DOM in the middle, and it doesn't really make much sense because the market works diagonally each price like this, you know. So we can see the price went up here, and sellers essentially have absorbed more. We can see that the delta is really negative, so likely this will break. All we need is this to be pulled, and then we'll likely see some sell side come in, and see if these orders down here are actually real, because of course you can see spoofing a lot of the time in the market. So we can see that buyers are still absorbing, as 122 contracts have just been absorbed, then prices ticked up, then there was orders then pulled. So ultimately, if 43 contracts or 40 contracts now are executed, then price will tick down, and likely this is the low of the day. So we should ultimately see a bit of a stop run happening. Sellers are just aggressively hitting into the bid at the minute. 172 contracts absorbed. And anytime an order gets executed here, it adds onto here, onto the volume profile. And we can see that sellers are just aggressively hitting into the bid with so much negative delta. 142 contracts were executed there, out of which 116 of them were selling. So there is no buying at the moment. So there's either two things this is going to happen: the market is going to really go down aggressively, or buyers are happy to absorb at these prices. So when you combine this with your standard, you know, Renko charts or candlestick charts or whatever you use with your key with the key levels that you're looking to do business, it becomes extremely powerful. You know, so as an example, buying this at the moment is pretty dangerous. You know, you're going to want to see a little bit more confirmation before buying, because the amount of aggressive selling that's going into the market. Ultimately, you'd want to see price fill out these orders down here before you'd even consider. You know, we can also see that there's 80 or 97 contracts. This is constantly refreshing, and bids are being pulled, whereas sellers at the minute are happy to stack into these prices. You know, they're constantly adding more liquidity into these prices, whereas the bid has been pulled, denoted by the bid pulling and stacking column here. You know, 27 has been pulled, 15 has been pulled, 29. You know, so there's always loads of volume and liquidity at lows, because you've basically got large traders are getting in, people are getting stopped out, and you can typically see loads of volume executed. So there are key levels that you need to be watching and deciding if you want to take the position at the key level you're looking to do business. Okay, so this is a relatively short one, this video, but hopefully this provides you some value. If this is your first time watching and landing on the channel, I would appreciate if you could hit the like button and subscribe. It would be a massive help to the channel. It gives me the motivation to continue to help traders and provide a proper order flow description of how the market is done, rather than just very basic stuff that you see in the market. This is not a traditional YouTube channel that shows moving averages and random indicators where you click buy and sell. This is truly how the market moves with real order flow, live data in the futures market. So I'd appreciate if you subscribe and leave any comments if you've got any questions, and I'll make sure and get back to you. Okay? Peace, guys.